What's up, everybody? It's CrenDeLaCreme Investments, and one is back at you again with another video. Today's video is going to be about market structure. I've did one of these videos in the past, and also just a lot of videos about market structure. But I honestly feel this has transformed my trading tremendously, and I'm just giving that value to y'all. But and I'm gonna make this video nice and sweet, short and sweet, and to the point, because that's how I like them. But it's really just one thing, and that's make it simple. And what I mean by that is, personally, what I do is I only use two time frames: the weekly and the weekly and the 4 hour, and that's the two time frames I use for market structure. Because personally, when I was just trading with a whole bunch of different time frames, and when you trade institutional concepts, smart money concepts, you get confused. I got confused on how many counter trends go on. I mean, on the weekly it can be bullish, on the daily it can be bearish, on the 4 hour it can be bullish, on the 1 hour it can be bullish, on the 15-minute it can be bearish. You know, and you get confused. You know what I'm saying? You can be doing something like this on a 4 hour or weekly, and then can also be doing this and then do something like this on like an hourly, and you would be thinking, all right, so well, it broke structure right here, better yet, right here. So you'd be looking to enter off this pink line with an R to R, something like that, and of course taking it down because it broke structure. Since it broke structure on a time frame, you would think that it enter. I mean, all smart money concepts is some kind of break and retest is essentially on some kind of time frame, a WM pattern. And you would be wondering, like, why did I lose that trade? Why, you know what I'm saying? Why didn't I get in? Because the overall structure on a bigger time frame was up. And you're using all these different time frames to kind of get structure. You can use different time frames to get different areas of interest, or zones, or supply and demand zones, institutional concept, or order blocks, or whatever you want to call them. You can use different time frames of that. But I recommend two time frames. And the time frames I recommend personally is the weekly and the 4 hour. So I'll actually go ahead and mark up AU. AU is one of the pairs I trade. Also use a indicator called order block. I nephew Sam to mark up some of my order blocks. So I go ahead and see what structure is ultimately doing on the weekly. And what I mean by that, I don't really look too much into what's going on over here, all this over here. What I look for is what's going on really right here, because we're on a weekly time frame. And I'm getting interests on the 15 to 5 minute. I don't need much. I can 30-40 pips. That's a 3-4 R to R for me. So I don't need much in the market. I don't need a big swing up. I'm not swinging this thing. So I usually look at that last weekly candle. Also go back to your candlestick Bible and look at the candlestick confirmations and closes. That is a strong bullish candle on a weekly. Higher probability that this thing is going to keep going up rather than down. It can go down. Higher probability that it's going to keep going up based off that formation, and also based off this, if you're looking for the bodies break of this structure to keep going up. And like I said, I got my weekly area up there. I use dailies for liquidity. I can make a video about that if who's all interested. Then I immediately drop down to my 4 hour. Go ahead and delete this. Beautiful. I had marked this up, but I didn't trade this. I don't trade Fridays, but it's neither here nor there. But I'll go to my 4 hour. Also delete this. And I'm looking for the last candles. All right, looking for the last candles. And as you can probably see, you don't need a rocket science to really tell you that this thing breaking, retesting, and going bullish. And like I said, compared to our weekly, strong bullish close, have an area of interest that's higher up here. Two bigger confirmations on a weekly time frame, powerful. Go up to the bigger time frame to get your structure, I recommend, and stick to two of them. And as we can see, we have beautiful market structure breaking, retesting, just breaking structure, keep going higher, higher highs, higher lows, higher highs, higher lows, just basic structure. And then once we see that, we know we're in a bullish trend. So now we have a higher probability that this thing is going to keep going up. All right. And so then we can eventually, I don't mark up my zones on, well, sometimes I do. But usually my zone markups are on my 1 hour. And as I can see, I see a zone right here. And I'll also see another 1 hour zone right here. And sometime I'll drop down to the 15-minute and see if I see another zone. Of course, because zones are subjective. Everybody's marks up their zones differently. You know what I'm saying? I just found that institutional concepts, you get the best probability of zones. And you don't have to look all, because like I said, I've had videos about this, but you just drag this. All it is supply and demand zone. But that's either here or there. But and then I'll drop down, move this out of the way. See another zone right here. And I don't drop down any lower. After I mark up my zone, I don't drop down any lower until it gets to this area. That's when I drop down to my 5-minute and look for my personal confirmation, which I can show you. But in a nutshell, that is essentially how I trade. Other than the actual details of me actually getting into the trade, which is important. But I do one-on-ones. Y'all can sign up if y'all interested in that. But I mean, it's not rocket science. It's not rocket science. We're looking for, and market structure is the most important thing out there. Other than supply and demand zones are important, but like I said, they're subjective. So it's discretionary. But market structure, for the most part, everybody, if I showed an uptrend, if I showed this pattern to everybody that don't even know what trading is, and I'd show this and say, what is this chart pattern doing? They're gonna say this is going up. Or if they knew a little bit about trading, they'll say this is bullish. Same thing for opposite going down. Show that to anybody. So it takes the discretion out of a lot of things. And sticking to the higher time frames. That's the key that y'all need to take away from this video. Higher time frames, because it's higher probability. It doesn't play around as much. And I know for a person that's always, I used to be on the second charts. I used to lose a lot because it plays around on the second. That's ridiculous. It plays around way too much on those lower time frames. You get such high probability trades, and honestly, it frees up your time. I'll take 6 to 8 maximum during the week, 2 minimum. You know what I'm saying? Usually between 2 to 8 trades a week, and I'm cool with that. So, and it works on your patience. It definitely helps you work on your patience, and then you get higher probability trades. For the way I trade, I do know scalpers that they can be on the ones. If you are scalping, I do recommend just going 1-for-1s. Don't do anything over that. Just 1-for-1s if you are scalping. But the way I trade, definitely move up to those higher time frames to get at least market structure. And I think that would save a lot of people. Honestly do. So 2 takeaways: 4-hour weekly, and stick to the higher time frames. I don't recommend going below a 1 hour. You can even use a 1 hour. Anything from 1 hour on up, honestly, to get market structure. But you would have to critique that on down and understand that you're on a 1 hour market structure. That it does play around a lot on the 1 hour too. If you look in the whole totality of things on like a 3-month chart or something like that. But that is all I got to say. CrenDeLaCreme is out. Oh yeah, go ahead and hit that like and subscribe button. Definitely, I'd appreciate that. Definitely.